Test, test, test. Hallo. Test. It's not working, right? Or do you hear me? I'm such a boomer with with OBS. It's horrible. Ah, perfect. Because I can't hear myself, but I guess that's a good thing. Um, well, okay. Let me announce it to the group. Um, let's see. Do I have... No, we hear you. Okay, perfect. Give me 1 minute to share it because I'm 25, but I feel like a boomer when I'm using OBS. So I have to fix it. Let's see. And, there we go. Okay, so I think everything is fine. Let me see where I can see the chat. Okay, cool. There is a little delay, so but I think that's always the case. If you have any questions, drop them in the chat, then I will try to answer them. For now, I will wait a few minutes to see if more people join, and then we can start. I believe we just had PPI news, but the market is not reacting, so I'm not sure. I thought we had it an hour before New York, so that should have been 10 minutes ago. But yeah, just watching Bitcoin, there was no reaction at all, so not too sure if that was. Let me let more people join, and then we start. Otherwise, I have to uh, explain the same thing a few times over. Mm, mm, mm. So the sound is good, and the everything is good. Good morning. Good to see people in the chat. Let's give it 5 minutes. I'm gonna take some drinks for myself and then we can start. So I'll be right back. Everything's smooth. Okay, that's good to hear. Welcome everyone. I love to see the people in the chat. Sam, Parabut, Irshad, Dominic, Antonin. Hey, Astali. How are you doing, father? And Team G. Can't recall the last time I joined the live stream. Well, that's a compliment for me. I think that you joined mine. So, well, let's just get started, and then if more people join in, uh, they can ask their questions. For everyone already in the chat or watching, make sure to ask the questions if you have them. For now, I first want to go over Bitcoin, and then some other charts, and then yeah, we can just go over everything. We just had a PPI release 50 minutes ago, but nothing changed to Bitcoin, so I'm not sure if what happened, but that can happen. Okay, let's first I have some interesting things to show, but let's first go to the higher time frame on Bitcoin because we saw a big move this week. Let's start on the daily. Let's clear that. So what we had is that we of course had this range before we started the downtrend, where we had a Model 1 distribution, as you can see right here, with the one, the two right there, and then the third step that caused the massive sell-off, which was October 10th. I think a lot of people remember that day, which was where Bitcoin made this drop, but a lot of altcoins went down 70, 80, some even 90%, which was a crazy day. And since then, we have basically been in that massive downtrend, where price lost the range low, which you can say the most important level is that one right here, where we have this downtrend from low, lower high, lower low, lower high, lower low, and there we made this naked low, and since then we have been in this range, where we had the low, it's a naked low, it has not been tested anymore. Then here we had, this was the start of the range, where you can say you have your range low, range high, then price took out that high, tap 1, tap 2, and once again price took out that high. So you can extend your range always to the new high as long as it stays within the deviation threshold, which is the red line right there. So here you had a local Model 1 distribution. Technical target was technically this low. Price just front ran it before we went into this crazy chop during the holidays and during the new year. So let's extend it now to this high. So now this is our newest range in which we can delete those highs where we had tap 1, tap 2, and now potentially we are forming tap 3. So we have to be aware that potentially this can be either a Model 1 distribution, in which this is the third tap, or it's a more of a PO3 kind of idea, where we get a bigger distribution and then a move back, and then have a bearish PO3, in which this is the manipulation phase, and then we can target the lows again. I personally see this as a realistic outcome. I know a lot of people always want much higher prices, and I also think it could happen. But if you watch how structured is, we have a low, naked low right here, and a higher low right there, higher low right there, higher low right there, and these lows, which the market makers love to use eventually as liquidity, because you have, this is a massive liquidity trail. It's a bit better, or it looks better if you draw it from this. But overall, there's a lot of liquidity resting below. We have a monthly low without a wick. So eventually, I expect price to take this liquidity. The question is, when are we gonna take it? Because we can also first go higher towards, because we have, for example, levels right here. There we have supply, which is a big level. But as long as we stay within this, like the deviation threshold is currently at 98K, which is a massive level. And currently we are trading inside this block, as you can see, wicked above it. So what happens around this zone is pretty crucial. So, but we can't ignore that, yeah, from the low up, so from here, basically structure has been bullish. So until we see bearish signs here, it's the better choice is to be locally bullish, but be cautious of this potential PO3 that we have. Also because if we look at the volume profile from low to current high, then we see that we broke above the value area. Here we had that deviation below it. Now we broke above it. So most likely scenario here is that you get a higher low for a higher high. And then if you start to see weakness, that could be a massive short. As long as you hold clearly above the value area high, and even more strength will be holding above the range, which we are currently doing, this could also just continue, maybe even into 98K or 100 before smacking down. Eventually, I still expect we will smack down, but I'm more of a short-term trader, so yeah, on a short term, I just trade what I see. And currently on Bitcoin, if we watch here, this was our former monthly high, which was taken out. So let's delete this. Let's keep it on the range. And then we can see that price from the low up. Do we have 30-minute structure? Yeah, we have 30-minute structure from, let's say, from this low. This is our structure: high, high, higher low, higher high, higher low, higher high, where we left demand behind, as you can see. So this is 30-minute structure, and we have demand. So that's right here. And we can here see that this is a pretty important block to hold locally. If price is truly bullish, then I expect a tap into this level and then a move out. I'm currently at the Bitcoin USDT normal chart, but the perpetual chart already tapped into this level. But the lower demand is still remaining, which you can see here. Like, this is the top on the USDT, which I normally use, and there we already tapped into it. So I can now show you this chart. Here we tapped into that block, but we have demand resting lower. This is a very important supply zone for me, and I'm gonna show you that in a minute why I think this is very important. And for longs, as said, I'm looking at potentially, we can draw a range from low to high right here. Classic range. And then if during New York, which is in 40 minutes, this is our range low. If we create a return to zone and do something like this, tap into demand, flip structure, then this could be another long back towards the highs, potentially higher. But for now, I'm also very aware of this supply. So if we move into that supply prior to taking demand, I'm interested in shorts. And I'm going to show you why I'm interested in shorts, because where was the, yeah, here. Okay, if we zoom out, let's go to the daily. I showed you, this is our current price action, right? Let's clear it all up. Where here you had a 1, 2, 3. This was a model 1 right there, which caused a massive move higher. Here you had a model 1, like the opposite of what happened here, but then bearishly right there. And then we have broke downtrend on the daily, naked low, formed a range right here. Right now, potentially price is above the range, but given that we are in a downtrend and that we are building liquidity, there's a chance that this turns into a bearish PO3. And if we go back to 2022, that I have right here, yeah, this looks very similar to what current price action is, right? Where we had, here you also had like a model 1 distribution, then here you had a ugly, like here you never took, wait, maybe you barely took the low, so here you had like a model 2 accumulation instead of the model 1. Price went higher, took the high, this was the high, and then price started the downtrend. What do you have here? Downtrend, lower low, lower high, lower low. Here you have a naked low. Here you started a range right here with a naked low, a higher low, higher low, higher low, higher low, aka liquidity. So doesn't this look rather similar to our current price action? Here, accumulation, distribution. This was a two-tap model. Here we had a clean model 1 distribution. Naked low, higher low, aka sell-side liquidity creation. What do we have here? Naked low, high range formation, low, higher low, higher low, higher low, sell-side liquidity. To me, this looks pretty obvious. And now the question is, what happened in 2022? So let's put a replay on. Price deviated the range and continued towards the downside. Where this move, so let's zoom in. Let's go to the 6 hour. I hope it's, yeah. Where this move above turned into the deviation and where price went for all this higher low, higher low, higher low, higher low, higher low, higher low, aka a lot of sell-side liquidity before taking out all the liquidity below the range. And I remember this one because this was in 2022 when I was more of a moon boy instead of a trader. And I knew I went into heavy positions here, longing because everyone was euphoric. We would go back to new all-time highs. I went into and I remember it very well, in V-chain, a very heavy V-chain long, almost like an all or nothing because I was already hurt hard from this downtrend. And this was, okay, we are back in town. This is the range breakout. We're gonna go back and I'm gonna make everything back. Well, that didn't end well because this was the bearish PO3 where this was the range, this was the manipulation above the range, creating creating a lot of liquidity for market makers to sell into, for them to grab all this liquidity. If we now go back to our current price action, could we have a similar situation where price is once again creating all that sell-side liquidity, currently potentially distributing here, making everyone super euphoric before price goes back in the range and goes towards the range low. To me, this is a very likely scenario, not just because I'm bearish or so. I literally couldn't care less where price goes. I'm mostly a trader, so I don't really care. But if you just compare 2022 price action with that range and current price action, they look rather similar. So it's something to keep in mind. Let's see how this further played out. So we have a reference for Here you can see price broke below the range. Potential PO3 bid price never reclaimed the range, went even lower. And this was the bottom, I believe, yeah, around 60k. This was also where FTX collapsed, Luna collapsed, everything went. It was like crypto was literally ending. And then this was the bottom range, if I remember it correctly, with this being like the range. Price never took out, or did we took out? I believe it just front ran this ultimate low, and that this was the bottom, and from here, oh, we took out the low. Yeah, then this was like a potentially even a model 1, or this was the bullish PO3 maybe. This was step 1, this was the bullish deviation, and I believe we now break back, and then that's the route to all-time highs. Yeah, like there we go. So that was eventually, this was how the bottom was created, again with the bullish PO3, the opposite of what happened here. So yeah, markets they repeat over and over again. So I'm keeping that in mind. However, as said, we are currently holding above the value area high, which is around here. The main structure pool is also, if we look from low to high, is higher high, higher low, higher high. So, and we do have some demand creations. Yeah, we have some demand levels right here. This is the first one. Demand. This is the second one. And then this is the value area high, which is basically the key level. You don't want to lose this. So until proven otherwise, these are levels where I'm looking for long setups. So looking for structure to work with, then break structure and then take longs all the way into this level right here. Because we have quite a lot of confluences around 92k as well. So my short-term bias is bullish, but I'm keeping in mind that yeah, we don't want to see a repeat of what happened in 2022, and that could happen. So yeah, that's what I'm aware of. Let me quickly look at the chat. Good morning, the new people that are joining. If you have any questions, let me know. PPI is not in Berg, it seems. Yeah, I think so, because literally nothing happened to Bitcoin, but we have tariff news today. Yeah, I believe we have the court ruling, but I'm not sure if I also saw some messages that can be delayed and stuff, so I'm not too sure, but it can be yeah, if it gets announced and the tariffs are illegal, then that will have a heavy impact on the markets. So I'm being aware of that if it gets announced and it is negative, that it can be yeah, pretty bad for the markets. So keeping that in mind. And from a manipulation perspective, it would be a nasty play by the market makers again if they push price into that potential high and then announce bad news. Then I'm pretty fucking sure that the bearish idea will play out. Hoe gaat het, bros? Met mij goed, man. Met jou? I'm scalp short from 95, looking for the flat hourly at 94. Even kijken. Flat. Short from 95. Yeah, that's nice. It's currently at current price. Oh yeah, yeah, that's this hourly has no wick indeed to the downside. So yeah, that is a play. I normally don't look at hourly wickless candles, mostly at 4 hour and daily and weekly and monthly. But yeah, often wickless candles get cleared. Let's see what our current statistics are. Yeah, we have very improbable highs and lows. High at hour 4 and low at hour 6. So it is very likely that we're gonna take at least one of them, but likely could even be both. Something like this, or maybe this, depends on what we get. But yeah, I can already say that there's like probably over 90% chance that we take either of these. Very low chance that we stay in this very choppy range. So waiting for that. For now, main bias is bullish, as explained earlier. Like in mirror, place in cycle is different. Place in the cycle is different. Yeah, why do you think that? I'm not 100% agree that the place in the cycle is different. Because I think it looks from a technical, if you look on the daily, it looks pretty damn similar. We're at the uptrend, higher low accumulation, higher high distribution model, downtrend. If you're gonna continue the downtrend, it is around here somewhere. If you look at 2022, you had higher low, higher high, higher low, also accumulation model, pushing up, all-time high creation right here with a two-tap model, like range, deviation, breakdown, continuation. Here, to me, it looks pretty similar. But yeah, it depends if you think we are still in a full-blown bull market, then you of course think that this is just the higher low and price does this, which can happen. But yeah, you have to see what happens. But as long as I said, I'm mostly a local trader, so if I get entries right here, or right here, I'm looking for longs and just hold them. Maybe if I'm lucky, they get into new all-time highs. But for now, I'm just yeah, being at risk that we are at the range highs. So that's not a place to suddenly become overly bullish. Um, let's quickly look at the data. Spot has been mostly pushing during that move up, and that is still holding pretty strong. So that's a good sign. You don't want to see spot start to distribute, but for now they are holding pretty strong. Perp CVD that went up with that move, which is not weird, but also holding pretty well. And here we can see that during this spike higher, open interest started to puke pretty hard. So that's probably a massive short that got taken out right there, causing that drop in open interest. Since there, it has been flat. For now, this looks pretty healthy. And then if we get a retrace from a TPO perspective, that 92K level is important, where we have that weekly view up and we have the point of control of yesterday. So that is the most logical higher low place to continue higher for a higher high. But often if Bitcoin is truly bullish, it doesn't give those obvious retraces and often does it very shallow. Mm, yeah, I'm not shorting anything yet. I think I keep the PO3 idea in mind because it's a potential outcome. But also here, if we look right here, like how long did that took? Like 9 days. Currently, we are 1 day above the range. So it can take a few more days. Also, if you look at the length of this accumulation, then often you don't get a PO3 which is the size of this that then breaks down. Often it's pretty relative to like 10 or 20% of what this move is. So if it turns into a PO3, I expect it to be something like this, where, or maybe like something like this, where we maybe for the rest of the week stay in it, maybe get a little move below it, and then here you can look for, like, the best case would be if we form like a potential even distribution model inside that PO3 with a bearish break. That would be a super clean trigger. But else I'm watching for, yeah, just overall local weakness around this level. And as soon as price gives a deep pullback, because a lot of people are now looking at 92k for higher low plays, but if you get a range breakout, you rather have like very, very shallow moves back in the range. So I personally think it won't go lower than here. And maybe if it's strong, it wouldn't do anything, because giving that entry opportunity to a lot of people, yeah, often the market doesn't do that. If this is a bearish period 3, they will just push it higher, make everyone think that they are truly too late, don't give anyone an entry, and then people start to FOMO in, because this is where 120, 150, 180k targets become real again. And then those people that wanted to buy, if price goes back here, they think, okay, now I'm gonna buy, and that's actually where the price starts to distribute and uses these people for extra liquidity before moving down. But I think it can take, I think this week we will stay bullish. You can also look at it from this perspective. It's not a confirmed range yet, but this week is very likely to remain bullish. As we can also see, if we take the stats, let's see, the daily stats are more bearish with a strong high. Yeah, well, I think that high can be taken out. But if we look on the weekly, here, very low flip risk of the weekly low based on time, 17%, and on distance, 15%. So very, very low probability to take out the low, while 92% of the weeks form a new P2 after Tuesday. So based on timing, it's likely to make a new high, opposed to that high that we currently have. And on distance, 73% of the weeks move further than we currently did. So there's still quite a lot of room for price to travel higher. So our current weekly low is, where's our low? Yeah, this is our weekly low. This is our weekly high. It is very unlikely to take out this low this week, and pretty likely to make a new high. So for this week, my bias is bullish. I'm more interested in longs, but maybe next week I'm being very aware of that potential PO3. And if price breaks above the deviation threshold, which is technically around 98, so we can even go to 98k. But if it breaks above there, then it's very likely that we see much higher prices, like 116 next. But for then, yeah, this week I'm more leaning towards higher prices. And I also see that currently pumping a little bit, with this being the local supply. Flip that, and like this, flip this, and then there's basically nothing back to new weekly highs. But main plan for higher probability longs will be to give like a accumulation model into these demand zones, and then long the model 2 or the model 1 if it gives something like that. Do you swing trade at all? No, not anymore. I don't have the patience for it, and I either hold, just a long-term holding, or I'm mostly day trading. Yeah, Sol playing out. I hope Sol is playing out, because that model 1, let's see. Yeah, wait, got it right here. Ah, yeah, that's looking good. For the people that don't know, I shared this in the group. Let's see. Where did I share it? Yeah, here. Local scalp long POIs for sold soon it lose the lower POI else it can get ugly. So clean inflation to look for longs around that zone. Break below and shorts are back on the table. So here we had the high, then price locally was trending down, so you can pull your range from low to high. Tab 1, tab 2, this was the key demand. And as I said, either for like local higher low here for model 2, or take that lower demand for model 1 right here. And that is exactly what price did. Where if we go on the lower time frame, you had that tab 1, tab 2, price came back with nice structure with a high, lower low, lower high, lower low, lower high, lower low, price breaking structure back to bullish right there. So for your model 1, that is actually your entry. Let's see, I did enter on that directly, I believe. Oh, I entered later. Yeah, I was at the gym, so I entered here, which is basically on the same level. You could also wait for price to get back into your range demand, because if you have a structured move like this, like low, high, low, break, then this whole zone, this is basically demand. So any move into that demand is to look for higher low plays. And as you can see, price did tap, yeah, exactly in this demand block right here. This is demand. You have sellers, buyers taking over. So this is your demand, perfect tap, then pushing higher. I'm just letting it run with my main target right there. But yeah, if you're bullish, you can extend your targets. This is the technical Wyckoff target. You can let it run to new highs. Can you trill your stop? Let's see. Because you can only trill your stop if there is no reason for price to get back. We had a tap of that demand. It's very shallow, but delete it. No. Like price left behind this demand under the current low. So what could still happen is that price eventually comes back for this demand in the worst case. So trailing your stop to this low can happen, but it's possible that price, for example, rejects from this supply right here, does this, comes back here, mitigates this demand, and then goes up. That would be very unfortunate. But if price, for example, flips above this supply, so breaks this structure right here, flips it, then I would say you can throw your stop to there, so you almost have a risk-free position. Last few days and week, the Model 1s are playing out over and over again. It's actually pretty crazy. As well on crypto, on BTC, but also on gold and other stuff. It keeps repeating over and over again. I'm not sure if I just notice it again and again, or that it's just the bullish market. Because also if we, yeah, like that long I took earlier this week, why is this there? Was also like a super clean 1, 2, 3, model 1, break of structure, breakout, retest, continuation. Then here you had even a model 2 during the night, which are 1, here 2, here 3, also breaking structure, back to bullish, breakout, retest, continuation. And then from here we have some demand levels, and locally price is just bullish. Here we don't have any accumulation models yet, but we are now pushing in supply, leaving some local demand behind right here. Let's put an alert there. And Sol already wicked through it. Even came in that higher supply. So this is again looking pretty good. Let's see if there are more questions. Do you hold any spot at the moment, or will you look to buy, etc.? I do hold some spot, but I don't like to give advice on spot, because then I'm always the guy that is responsible for that. And even if it goes well, it's nice. But if it doesn't go well, then people still think about me giving advice and stuff. So I can give trading advice, what I expect from the charts on the short to medium time frame, but I don't advise or give my opinion on spot holdings. It's not my top cup of tea. How to say that? Right there. If we look at USDT, it's also an interesting chart. Let's look at the daily, on the 3-day. We have this massive range, where price has been in since March 2024, where you had the, let me make this perfectly to the good points, right there. We had a 1, 2, 3 model 2. Price came back for this extreme demand 3. So technically you have a model 2, extended model 2. Technical target of that is the range high. However, price just barely front ran that range high, and is now pulling back, and has since there been in this range for a long time, where the main bullish structure pool was from low to high, basically this higher low, higher high, higher low, I mean higher high, higher low, higher high. So technically on the higher time frame we are still bullish, and then price formed this range where you had a 1, 2, 3, aka a model 1 accumulation, which brought price to the technical target right here. This turned into a range high sweep, price back to the range lows, and right now we have this new range we can look at, or not a new range, but with the tab 1 range low, currently price is deviating that, or at least it's at the range low. So this is potentially a bounce zone for potentially a accumulation, but for now it looks pretty aggressive, especially if you look at the last move down. This is pretty aggressive. What you rather see for a bullish case is that you get this and then flip it bullish. Right now this is looking more like it could also continue lower, but yeah, the main level I'm watching is this demand, which is, let's see, yeah, here it's a 6-hour OBIM. And OBIM is an order block where you see 1 candle down, 2 candles down, 3 candles down. The amount of candles doesn't matter, but it's about the reaction from the candle afterwards, because this is where sellers stepped in and then buyers took over, leaving an imbalance. You can see that fair value gap from this high, from that candle till here. This shows a lot of buying interest. So at this level, a lot of buyers, or like market makers, pushed price higher. So if price comes back for that level, that's often a level that gets defended by the market maker to push price higher. Or if it is lost, that tells a very clear story that the trend has flipped, that the market maker is not defending that position anymore, and then you get continuation down. So right now, price is moving towards it, but not tapping it yet. But for now, this looks more bearish than bullish. There's also not any structure. We have some local supply right here. That is the supply. Yeah, I'm waiting for this low to be taken into that demand, and then watching what happens. But if we also look at crypto, it's likely that this continues to make new weekly highs. So then it's very likely that this at least steps into that lower demand block and maybe even loses the range. But yeah, I have my alerts ready. Let's see what happens. For now, it looks like this is bullish. Okay, we are almost in the New York. So then we can look at the current New York stats. New York P1 is currently at hour 12, hour 14. Yeah, I'm gonna show you why I look at it, because I often look at the stats on the daily, on the weekly, but the one I like the most actually is the New York stats, which are yeah, for crypto. I barely trade London because London is mostly not worth trading. There does not happen a lot, and a lot of fake moves, and you always see that. For example, today also you have this was like this was the London price action. So I like to use tighter stops, but then you see that New York almost always takes either the high or the low, or the high and the low. So then you are watching the London session, and it's not worth it, for me at least. But right now the low is this low, the high is right there. So we can look what are stats telling us. We can see time statistic 31% of the sessions took out the session low, and distance statistic 23% of the sessions took out the session low. So the session low is already a pretty strong low, which is this low right here. And then the high, okay, we have a warning on 12 because often the stats are from 12 till 15. So it's now a bit too early to use the New York stats, but after 15 UTC, so that's in 1.5 hour, then you have your confirmations for the New York stats. But there is quite a lot of upside still to be had on the New York session, both on time and distance. So keeping in mind that the overall trend is bullish, we created some demand. Yeah, this low could potentially already be the low, and that price just moves higher, maybe gives a retrace into this demand and then continues higher. Bearish scenario would be that this is the pre-New York open pump, and that we take liquidity from this high or from this high, that we form a strong New York high in like the next half an hour, then sell off, and then if after that you take out the New York low, then this is a very strong high, and then lower is very likely. So that's often how I play the New York sessions. But for now, I don't see anything too interesting. I have an alert in this demand to see what happens. But yeah, I'm more I like to play my models, the Wyckoff models, or have really clean triggers. Right now for Bitcoin, I don't see a setup. If I don't see a setup, I'm not going to force it. On Sol, I saw a setup, which is the Model 1. Confirmation, that is a clean long. And that's what I like to trade. For Bitcoin, I don't see it currently. You can look, I don't know if people have a question or request. Yeah, the first move is often a fake move. So that's why I'm watching currently, because pre-New York pumps are yeah, often they get reversed indeed. But yeah, I need structure to work with. For me, structure is the most important factor. And right now, from low to high, this is the structure. So need to invalidate this supply, this demand, break below it, and then I'm interested in shorts. Or we need to give new structure like this. Potential 1, 2, 3, break structure, and then I'm also interested in shorts. But for now, I don't see anything on BTC for now. Um, yeah, for Sol, I'm gonna trail my stop to this low for a very tiny loss. I'm also gonna take a little bit of profits so that it turns into a win nevertheless. Basically, because we just swept this liquidity, right there, extreme liquidity, right there, and we have New York Open, pre-New York Open pump. So you can now trail your stop to this low, take some profit, so it's a win nevertheless. And then my main TP was this high, which is the Wyckoff target. But you can watch for how price behaves. I would always at least close 50% at the technical target, but chances are also pretty big that it just forms higher lows and eventually goes to that new weekly high. Also for that, we can look at statistics just as a confluence. Like, how likely is it that the current high of Solana holds on the weekly? Let's look at it. Here, so last 3 years of data on Solana. Flip risk, 23% of the weeks took out the weekly low, very low. 23% took out the weekly low, also low. Then 94% of the weeks form a new P2 after Tuesday. So 94% based on time statistics, and 100% of the weeks moved further than 8.1%. So on the weekly, if we remain bullish, there's a very, 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 very high probability or chance that we take out that weekly high. So in that case, for me, a signal, take some profits at the highs, but also definitely let some run towards new weekly highs, because that is based on statistics also very likely. And I see that we have supply. Let me see what for kind of supply it is. Oh yeah, that's a pretty big level just above, which is the 12-hour supply. We also just hit the technical target, or at least we did yesterday, from this 1, 2, 3 model 2 accumulation on the higher time frame. Super clean, which was similar as what Ripple did earlier. Put an alert here at the technical target. BTC. Let's delete those. New York has opened. Let me look at the chat. So now we get the New York move. Can also look at what is happening on the low time frames. On the order flow, see open interest pumping a little bit on the New York Open. And like most liquidity is lower locally. Mm-mm. Yeah, for now it's bullish until proven otherwise. But what you don't want to see is that, as explained earlier, is that we flip the stats bearish and invalidate this demand. Then you have bearish New York stats, and then I am shorting it. I also took some profit so that this is a win nevertheless. Reason why I am shorting this then is because price took this key supply, and then I have to actually go back to the fractal of 2022, BTC USDT. Let's use MACD, then daily, then go back to our 2022 fractal, which was right here. And then we can identify how did data point. Why is that? Well, let's just use this one then again. 2022, right here. And then look how that, if it works here. Yeah. So here we had the range. And we can look how did the deviation actually look. Because that's what we can learn from this time if we're going to see something similar. So price had an aggressive push above the range, then came back for the created demand right here, mitigated that, came back for the extreme supply, which was located right here, and there price never broke through, where it actually formed like a local 1, 2, 3 model 2 distribution before it accepted back in the range and made a full rotation back to the lows. But this took a few more days as we currently have. But if we would compare that with the current price action, then this is our current extreme supply. And this was the high, lower high. This was the extreme supply. And then if you look at it, price tapped into key demand. What did price do here? This was the key demand that brought price up. Price retested it right here. Price came up. So if it's gonna do a replica, and like fractals never work one-to-one, but then if price fails to break above this supply, then you could keep an eye on potentially a similar move in which you maybe take the high from the 1, 2, 3. If you get local distribution here, then RR you could look for shorts. But as said, main bias is bullish. I think this is not ready yet to break lower. So for now, I'm leaning more bullish than bearish. But if something similar happens in the coming week, or if we indeed invalidate this demand, then I'm definitely looking for shorts. But yeah, trading, it's always, you can make a lot of predictions like this is gonna happen or that is gonna happen, but I can make like a bullish scenario why we must go to 98k. But if we now see a move like this, then that whole scenario is invalidated in an instant. And the same is true if I say, okay, if we I think we go lower, we break this demand, we do this lower high, lower low. But if we now get a move above here, then that's also invalidated. So I rather react to what I see than to predict what could happen, because there are a million different ways what can happen in each moment. But for now, structure is bullish on every time frame. Even here, this is our local structure. So most likely scenario, based on structure and statistics and basically everything, is pointing higher. So yeah, I would look for longs until proven otherwise. Sol is going strong. Mm, How do you get the entry confirmations? Learning a lot from you. Thanks a lot. Thank you. Good to hear that. I mean, for example, when we get the retest to the range low, what kind of structures you look to form a potential bottom on low time frame? So with range low, you mean probably this low right here, or right here. I always use structure, which means that, as said, we have now this as structure. So what I would love to see is to get here a retracement with internal structure, where you form a lower high, lower low, come into this demand, break this internal structure back to bullish, and then I would take a long stop loss below this, or to be safe, this low, and then target the high and above. That would for now be a long I would be willing to take, also because we have those likely strong New York sessions. But other than that, what I like more is to play range models, which is what we had on Solana, where you have a range. So you're trading lower, low to high. This is your first range pool. Well, let me share it on a clean chart, because let's show it here. So here you are trending up. So like this is the last move down that created your high. So this is your main structure, which even created demand. So this is the main demand you want to hold. Falling back below that, and yeah, it looks pretty bad, because you don't want to lose after a move like this, where clearly buyers stepped in. Then if buyers push price up and then quickly afterwards they lose it again, then that's a very bad look. That's not what buyers who bought here, they don't push it this aggressively, only for this to then reverse. That will show that sellers are very strong. So then you have a clean invalidation, which is you don't want to lose this demand. And then you can look, what is your structure telling you? Well, you can pull a range from high to low, right here, which is valid, because you are in an uptrend. So then you pull your range from the high point to your low point. Well, let's just use it like this, where you have your range high, your range low, and your range is valid the moment you tap your range AQ, which is the middle of your range. So that happened here. So then you know, okay, I have my range high, I have my range low. And because we are high time frame bullish, you want to look for accumulation models. When do you have an accumulation model? Is when you at least sweep your low. And sweeping the low means that you take out the low, but you don't break below the deviation threshold, which is this red line right here. So any move below your range, but that does not break below that red line, can be seen as a deviation if you move back into your range. And that is what you can see what happened here. Price went below it, back above it, which means that sellers are getting absorbed by someone. That someone is often the market maker who wants to accumulate to push price higher. So here you go below your range, get back above your range. The moment you get back in your range, this is a valid deviation. So then you can lower your range to that second tap. This is now your tap 1, your tap 2. For your Wyckoff models, you want always 3 taps, which can be either a higher low, like here, or a new low at 3 drives, which is what happened here. We have 1, 2, and price comes down again with structure, high, low, lower high, lower low, lower high, lower low, a move below your range within your deviation threshold. Price breaks structure back to bullish, right there. Acceptance back in your range, then this is your entry. Exactly on that break of structure, right there, is technically your entry. This is your invalidation, which is now your tap 3. And then your target is technically the range high for 5.2R. But I would take out a good part right there, because we have a little supply above as well. But these are the high probability trades. This is where I mostly focus on, and they happen a lot. As I shared earlier on BTC, we had it here, we had the Model 1, then here we had the Model 2. This is also why I thought higher is likely, because market maker is clearly accumulating, and that's also the crazy move higher. But right now on BTC, I don't see a truly clean setup that I would want to take. You could now say that if this is your high, that this is your low, we now tap the mid-range. So you can say this is our new range to watch with range high, range low. This is all internal price action. Now you want to wait for your second tap right there for longs, or look for distribution models. That's probably what I'm going to do for BTC. Thank you for tuning in, Coding Night. I think the stream it's been going for quite a long time. I don't know if anyone has any specific questions or want me to look at anything, then I can do that. Else, I'm gonna close the stream. So let me know if you have any questions. And before I forget it, please leave a like to this post if you enjoyed it at least, because then it's good for the algorithm, and I will do more streams in the very near future. And if you have any questions, let me know right now, then I can go over them. Then I'm gonna set some alerts at the high right there. Local demand. What is the importance of volume when looking for models? I don't really look at volume specific, but it's more about the like you can on the candles itself you can see basically what the volume is. There goes TP. Main TP just got hit. It's nice. But you can see on the candles what the volume is. So for example on Sol, you want to have a good breaker structure, which is a breaker structure that flips confidently above your high. So you have low, lower high, lower low, lower high, lower low. Then this is the level you want to break, and you want to do that on the volume. But if you have a lot of volume, then you can see that on the candles, because a good break of structure is one that closes above and then continues. If you have, let's say this is your structure, so you need to break this level, and you come up like this, and then you enter right there with your stop here, then chances are that you get stopped out. But that's because this is not a good break. A good break is a break on volume, but if there's a lot of volume, the candle will also be more aggressive to the upside, then give the retest and then move up. So I don't look at the volume like that, but I look at volume in the form of vector candles, which is something I will explain in future things. But this is where you want to see what, how I'm gonna explain this easily. What you basically want to see is red candles into support for longs, or green candles into resistance for shorts. So let's say here, for a market maker needs to have sellers. So if a lot of selling occurs in this candle, for example, you know that there's a lot of selling going on. But you have to ask yourself, who is buying? Because if a lot of people are selling right here, which is showing the red candle, who is buying on the other side? Because you can only sell a lot if someone else is buying. And the same can be seen right here. Another red candle into demand with a potential accumulation model. So then the question is, who is selling this much, but who is on the other side absorbing it? And then if that aligns with a 1, 2, 3 break of structure, then that's for me the confirmation, a little bit of extra trust in the model that it will probably play out, because you have a market maker absorbing here because of those red candles. And those red candles represent a lot of volume, or at least not volume, but it shows the tick volume. So the amount of orders taking place in one single candle. But probably, I don't have the volume indicator right here, but probably you can see spikes on this candle and on this candle, as well on the normal volume indicator. But this is the amount of orders within a certain candle. So I hope that explains it. Hell of strength from BTC. Yeah, BTC's once again. Yeah, damn. Yeah, it's often when BTC is in a trend, it it just goes till everyone FOMOs in, and then it rejects. But that's often higher than most people expect. But yeah, that's why BTC can be a pain in the ass. Either it ranges for months, and then when it starts trending, it doesn't give any entry opportunities. So that's why I like to trade Sol a little more. And I also trade gold, and we can actually have a quick look what is gold doing. Look at that. That's what I like to see. For anyone that did not watch the video where I explained the different trade opportunities on gold, watch that back, because there you had literally Wyckoff after Wyckoff after Wyckoff after Wyckoff, with a 1, 2, 3 Wyckoff model 1, extended model 1, afterwards range deviation right here, here a 1, 1, 2, this is potential 3, potential move back, and on the low time frame, range high, range low, right here, price took out the range high. So this is our tap 1. This is the tap 2. And then price broke structure. Like on the 5 minutes was the structure this high, high low, higher high. Price broke structure right here. Came back probably for some extreme supply. No, not per se. Well, it took extreme liquidity right here. So this was your break structure, bearish boss. Price took extreme liquidity and broke structure again. Yeah, basically right here. So getting an entry was pretty hard, but the expectation of a lower high played out. So now we can see if price closes below the deviation threshold, which is also the 50-minute market structure level, then it's very likely that you get a, well, then it's a range breakdown. Then you can look for a lower high for a lower low. It's not confirmed supply yet, but this is supply you can look for with the more refined supply right here. So let's put an alert. Then if price closes here, you can look for a potential retrace into supply, break structure, short it, and then this would be a 1, 2, 3 distribution target right there. Gold is trading super clean. Alert, Bitcoin new highs. Very, very good. Damn, Sol also going very well. Clean, clean, clean. Okay, let's see. Sweep daily open rockets. Strength. Okay, everyone, thanks for watching. I'm gonna close it right here because I've been streaming for almost 1.5 hours. So that's more than enough. Thanks everyone for watching. I will do more streams in the future. So hope to see you there. And thanks for everyone that was here, gave a like, interacted with the video and everything. So thanks for that. And yeah, enjoy the green candles. Cheers. Now this boomer has to see how to close the stream. Where can I do that? Oh, I can do that probably here.